U.S. stocks are tumbling for the second day. The Dow is already down 1,000 points after dropping almost 1,700 points yesterday. This comes amid President Trump's escalating trade war.
Breaking news this morning. Look out below. Take a look at U.S. stock futures. All markets on edge and dropping. These futures just took a notable turn downward.
In the most significant escalation of trade war between the U.S. and China, Beijing imposed retaliatory tariffs on 34% on U.S. imports on Friday.
In recent days, tensions between the United States and China have surged once again, sending shockwaves through the global economy. What began as a strategic maneuver has rapidly escalated into a full-scale trade war, shaking financial markets and threatening long-standing trade relationships. On April 2nd, in a move coinciding with the symbolic Independence Day announcement, the U.S. administration unveiled sweeping tariffs on imported goods, targeting a broad range of sectors. The immediate fallout was severe. Wall Street suffered a staggering $3.1 trillion collapse in a single day. But that was only the beginning. Just 2 days later, on April 4th, China retaliated with tariffs of its own, an aggressive 34% hike on American imports. This triggered a second wave of panic across U.S. markets. The deepening rift between the world's two largest economies, long simmering beneath the surface, has now boiled over. Washington's justification lies in its long-standing grievance, an enormous trade imbalance. By the end of 2024, bilateral trade between the two nations stood at $660 billion, $530 billion in Chinese exports to the U.S., and only $130 billion flowing the other way, accusing China of flooding its market while restricting access for American goods. The U.S. imposed high tariffs in an attempt to correct the imbalance. But China's countermeasures have only raised the stakes. Beijing's 34% retaliatory tariff targets vital sectors of the U.S. economy: agriculture, automotive, electronics, and machinery. These areas are now under immense pressure. American farmers, particularly in the Midwest, who export soybeans, corn, and meat to China, now face the possibility of losing a critical market. As Chinese buyers seek alternative suppliers, U.S. producers are left vulnerable to significant financial losses. Even in the relatively smaller trade spat of 2018 to 2019, American farmers struggled. This time, the impact is far broader and deeper. The automotive industry stands to suffer as well. Companies like GM, Ford, and Tesla, which either export vehicles to China or rely on Chinese parts, now face rising costs and shrinking competitiveness. With margins under pressure, these firms may resort production cuts, layoffs, or price hikes. Tesla's shares have already declined amid uncertainty surrounding China. The electronics and tech sector is equally exposed. While the U.S. remains a global leader in semiconductors and high-tech software, China represents a major market. The new tariffs may not only reduce product flow, but also disrupt global supply chains. If Beijing further tightens restrictions on U.S. tech companies, the ramifications could reverberate worldwide. Indeed, a second down in tech stocks on Wall Street between April 3rd and 4th reveals investor fears of a deepening crisis. Analysts estimate that the 34% tariffs could lead to a $40 to $50 billion contraction in U.S. trade. And should other nations, such as the EU or Canada, choose to follow suit, the damage could be even more severe. A domino effect of protectionism may emerge, shrinking U.S. companies' global market share and amplify volatility across stock markets. On the consumer front, Americans are already feeling the pinch. Prices for imported goods are rising, while domestic industries brace for shrinking export opportunities. With reduced income for farmers, strained tech and auto sectors, and job insecurity looming, the broader risk is of economic slowdown, higher inflation, lower demand, and falling employment. China, meanwhile, is not backing down. Through state media, it has signaled that any U.S. move will be met with equal force. Far from isolating itself, Beijing is reportedly preparing stimulus packages to boost domestic consumption and forge new trade alliances with Europe, Southeast Asia, and Africa. "We are not closing our market," one report stated, but trade with the U.S. has proven too risky. This strategic shift could further isolate the United States from global supply chains. As Europe and Asia react with caution, Countries like Japan and South Korea find themselves caught in the crossfire. Although this may seem like a bilateral issue, its consequences are deeply global. U.S.-made goods that feed global production lines, spanning agriculture to advanced technology, now face unforeseen disruptions. The financial community's talk of a second bottoming out is not mere hyperbole. After the $3.1 trillion crash, markets have again plunged under the weight of China's retaliatory move. The road ahead may bring further shocks. A third or even fourth market collapse is not out of question. Experts warn that if the standoff persists, the world could face a prolonged economic crisis. Trade contraction, corporate bankruptcies, rising unemployment, and a wave of global protectionism could undo decades of economic integration. So why did China respond so forcefully? After years of failed negotiations and mounting frustration over U.S. accusations of intellectual property theft and forced technology transfers, Beijing chose to draw a hard line. This is not merely a defensive gesture. It's a message. We will not back down. As the battle intensifies, nations around the world may be forced to choose sides. If the U.S. and China continue on this path, the fallout will spread across borders, affecting not just governments and corporations, but everyday people, farmers, factory workers, and consumers alike. With every passing hour, the world watches closely. Will the two powers come to the negotiating table, or is this the dawn of a new era of economic confrontation? In a world so deeply connected, one thing is clear. No one remains untouched when giants clash. Stay tuned for more on this unfolding saga, and share your thoughts. Who do you think will ultimately win, and at what cost?